Everybody, welcome to another Midas Letter RAW. I'm here with my good friend Edward. Special Head Mileski, Edward. We have a show to end all shows today. We have Mr. Jim Bailey, who's the CFO of NuRAN Wireless, will be joining us today live from. Where is he coming to us from? Is it from London, England? London, England. You don't say pity, Edward.
T.
And Jesse Channon's going to join us. Jesse Channon is the Chief Growth Officer. Is that the guy who grows all the weed, or the Chief Revenue Growth Officer?
Yeah.
You'll have to see the interview to find out. He's the Chief Growth Officer of Columbia Care. Do you remember Columbia Care was the one that merged with that Canaccord Cannabis SPAC? Woo! Anyways, they're doing great things. Anthony Tennyson joins us. He's the CEO of Awakn Life Sciences, resuming our plumbing of the depths of psychedelia as it pertains to capital markets everywhere. Ugh. Edward, we're going to talk a bit about interest rates. We're going to talk a bit about the smash and grab.
The smash and grab.
Well, the Fed smash and grab, same thing. No, I mean the smash and grab that seems to be having an effect on retail stocks in the U.S. We're going to talk about your double top in Amazon and what that might portend.
Well, it looks like one to me, and I'll tell you, we'll get a chart up there later, and I'll show you.
I bet you will. I'm not one to argue with you when it comes to technical analysis.
Double top.
Double top. So that's our show for today, and we hope that you'll enjoy it. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. Okay, let's talk a bit about some of our audience questions now. Rajiv Agarwal says, how is Phinergy of Israel's hybrid lithium-ion and aluminum zinc-air battery systems compared to GMG? Now, Rajiv, I'm going to tell you that we haven't had the time we just got these questions today. We haven't had the time to look up your company. And so we're going to go and take a look at what the energy density coefficient is of Phinergy. And we're going to look at charge time. We're going to look at fire hazard. We're going to look at all these things. Suffice to say is we're going to have an answer for this question next week, inshallah, because we don't have one today.
Okay.
Hunt Henyon wants to say that you interviewed Currency Works, CWRK, in October. Can you please explain when the stock will quit crashing? Well, there's a real endorsement, eh? Boy, he's quite the promoter.
Yeah.
When the stock will quit crashing. Let's see. All right. So, yeah, looks like it is on the slow burn.
Yeah. Bubble-esque type of action back there.
When is it going to reverse? When they start making money. Put it that way. When they can report Q-on-Q double-digit growth, that's when the stock will reverse. When there are more buyers than sellers, that's when the stock will reverse. When I don't know. Those are the two factors that I can say with complete authority. I have no interest in the stock, so can't really talk about it that much at this point. Hope that wasn't too useless for you there, Hunt. Mr. West Mountain says, when the USA legalizes cannabis, which stocks are the candidates to gain the most? To that, I would say, Mr. West Mountain, if you look at the other big headline events in the evolution of the cannabis industry that moved markets significantly. So when, the stocks that responded most aggressively to things like to California becoming legalized, to California rolling out there, to when the big markets became legalized and the companies that were active in those markets, those are the companies that I would watch. Mind you, with all this talk of decriminalization in the U.S. at the federal level, that will have a huge effect. Which stocks to buy? The ones that responded best the last times to the big headline items in the U.S.
Right. Well, a lot of the air has been taken out of that sector.
Yeah.
It's now there's people already established.
Yeah. Yeah, Stonk Nerd wants to know, are there any stocks you are long this week? Well, I'm definitely still long GMG, Graphene Manufacturing Group.
Volatile stock.
Well, it's gotten a bit volatile, but within a big wide range. And this is very typical of a stock. We don't mind talking about it. Again, I have shares in this company. I have interest in this company. I buy it and sell it. I've had as much as 400. I've probably made over, I'm going to say I've made almost $2 million on this stock so far. So
Really?
consider me biased. Oh, yeah.
You hold out on me?
Yeah, well, I am actually, yeah. So this is a stock I bought back in 2018, I believe it was.
Jesus.
And it's done very well for me. Still have the stock, still buying the stock. At this point, when I see it dip like this, I'm on the bid. So consider me conflicted. Also still long, what else am I long? Big time long. More long this week than I was, this month than I was last month on US copper. And that's because I just can't seem to pull myself away from it because look at this chart. Let's go to the big chart here. Oh, let's reset it. And this is why, you know, copper got up to 33.5 cents the last time copper ran up to, well,
so it hit 36 briefly, yeah.
Yeah. So this is what I'm looking for again when if copper blows through its recent high of 485, I can expect that U.S. copper is going to go large. I'm still long Voxtur, VXTR. I'm long...
Just another comment on the USCU. The mining companies that are producing copper, they're building up cash, and they're going to need to expand their reserves. And that's the play I see on U.S. copper, especially, and I believe copper is about to go through $5. People will want copper properties. Anyway.
Yeah. Walk the Line wants to know, I know you used to be big into mining and now biotech. Biotech? I don't know any biotech stocks. Did you have any personal experience with investing in Bre-X, and what are your thoughts on Theranos? No, when Bre-X happened...
You missed that one?
Yeah, so Bre-X was the nail in the coffin of the mining industry back in, was it?
86?
86. That started the nuclear winter in mining that lasted until the end of the tech boom in the 90s. So Theranos, what are our thoughts on Theranos? Not really biotech.
She's taken a stand several days now and trying to talk her way out of this.
I think, to me, just looking into her eyes, I think she is a psychopathic liar who actually believes her lies and thinks that that's going to carry her through, and she thinks that she can convince anybody that her intentions were good. Maybe. But I don't see it. I think she's going to jail for a long, long time. I think she's going to be made an example of, because one thing in the U.S. system, if you're a woman, you're going to be made an example of, because the U.S. old boy system is as misogynist as it is anti-black, anti-gay, anti-everything. So remember Martha Stewart? For a little insider trading, off to jail she goes. Meanwhile, everybody else in that deal didn't even do time. Yeah, no, believe me. I've got an eye on history, and I think she's going to get slapped.
An eye on history. You've heard it here first, folks.
Yeah.
Okay.
Eric Morkinson, hey James, regarding Voxtur, can you ask them about their plans for a proper PR about their story? Wow, there's a little slap. I mean, they should really start updating their latest investors presentation, which doesn't even include their latest plans for an asset management platform. Whoa, okay, Eric. So that tells me that you've been listening to the interviews with Gary Yeoman, the executive chairman, who does make reference to this asset management platform. But you know, here's the thing about Voxtur is they are so busy bolting together this machine, and they are anti-promotional. They do not seek to draw attention to themselves while they're building this monstrous beast, because it's counterproductive to them. They don't want to be dealing with inquiries from the SEC about misleading press releases and where's the beef and overly optimistic statements. This is why I am so happy to be part of the Voxtur story, why I hitched my wagon to their train, is that we're not going to talk about stuff that is premature. And Voxtur also is no longer a development stage company. It is now an operating company, and it's going to trade on the merits inherent in its financial performance, which is coming out on November 29th, and I invite you to glue your attention to that release and those numbers, because all of this future stuff is coming down the pike. If they talk about it,
Sure.
it does happen, but we're not going to talk about it before it's time. So as far as a real PR, I mean press release, the press release will happen when it happens. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. So let's kick it off here. Let's pull up a chart of, I don't know, how about...
Copper's behaving well.
Okay, so let's start with copper. All right, we left our arrows up there from last week. The trend was lowering, but we're definitely in a reversal. I think we should need to put a little arrow in there, don't we?
Yeah, well, look, it's, I think it closed today over 446. If we start seeing it get through 450, then we're not far away from that top of 475, 480. It's behaving very well. Copper is saying the economy is moving along.
Yeah, it's going in the right direction. Mono, so this is the thing. If Dr. Copper is the bellwether of all things economic health-wise, we still have the Chinese property development market teetering on the brink of a catastrophic meltdown.
Right.
Which would be negative for copper. Countering that, we have the
Infrastructure bill.
somewhere between 1 trillion and 2 trillion, depending on who you talk to, seems to be the thing.
Right.
I've heard some people call it the $3.5 trillion bill. Anyways, that's definitely bullish for copper.
Yes.
The election in Chile, now the far right candidate is ahead of the far left candidate, and there's nobody in the middle in Chile by 3 points. Chile being the world's largest copper producer.
Right.
That is bullish for
Copper.
I think it's bearish for copper, because that implies that there's not going to be a problem with copper supply out of Chile if the far right gets in. Mind you, how far right are they? Does that mean like what?
The bottom line is copper is one of these things in our world you can't live without.
I can.
Well,
No, I can actually. Copper is
lights.
connecting everything.
Yeah,
in here.
yeah, exactly.
That's,
So we'll see, but watch the price. The price tells it everything you need to know.
the price paints the picture. Okay, so copper is definitely in a upward trend now, and that is indicative of the intact nature of the general direction of commodities.
Yes.
And inflation by extension.
Yes.
So we know that the last CPI indicated 6% inflation annualized, which is well above the 2% target that the Fed has been using to justify its continued quantitative easing. Now, in the release from the FOMC on November the 2nd, I believe it was, they did say that they were scaling back, tapering from 120 billion per month to 105 billion per month. Fine.
Right.
That still fractionally banks out in the grand scheme of things to at least $1 trillion a month, by my reckoning. And I've had some people suggest to me that I don't understand the banking system to suggest that Fed holdings are fractionally banked out.
That's why they don't like to talk about this stuff too much.
Well, to which I respectfully retort, I'm not suggesting that the Fed is fractionally banking out its reserves. I'm saying that participants in the Fed auctions who have Tier 1 capital in the form of treasuries on their balance sheet use that to fractionally bank out what their total capacity is in lending. And that creates the liquidity in the marketplace.
The multiplier effect.
Which is the corporate welfare that is holding up U.S. stocks.
Yeah.
So,
well, going back to we were talking about Amazon, if Amazon if that's a double top.
On that note, let me quickly pull up an Amazon chart.
All right, you see that top back in here, right there,
Whoa,
right there,
right up here.
And then this is 4 months ago or so.
Okay.
Right?
So this is a reverse head and shoulders.
Well, all I can say is it looks like a double top. And look how far it's fallen off from there that quickly in 2 or 3 days. Look at this.
Okay, so this is telling you what?
That trend may be about to break down. That trend. It came off hard from that top.
Okay, well.
Look, but now if it goes through it, all bets are off. I'm just saying it came off very quickly, and the market sold off 2 days ago.
Sure.
Sold off again yesterday. 2 worst days we've had.
Right.
The budget's out. The $1.5 trillion package. There's no
Hasn't cleared the Senate yet, though.
Okay. Well, like I said.
Or has it? I know it cleared the House, but it hasn't cleared the Senate, which is where they're going to have problems. Anyways, or Congress rather. But so you're saying that this is starting to suggest, at least from Amazon's influence on the broader markets, that the end of the non-stop increase in prices of stocks could be over in the tech sector?
Well, you know, it all ties into this inflation, right? If rates start rising, these stocks that have done so well in this low environment rate, the FANG stocks, these stocks may be starting to suggest that their magnificent, stellar run, maybe it's over for a while. I want to see this evolve.
You know, that would warm the cockles of my heart, because you know what? When the large cap techs take a break, that's when the small cap techs start to shine. And our next guest, who is a client by way of disclosure, we have 250,000 shares at $1.70, stocks at $1.25. We're doing this out of the goodness of our heart, that means at this point. Anyways, nonetheless, we are conflicted. If this stock goes up, we stand to lose money. That being said, NuRAN Wireless CFO Jim Bailey joins us now from London. My next guest is Jim Bailey, CFO of NuRAN Wireless Inc., trading on the CSE under the symbol NUR and trading in the United States under the symbol NRRWF. Jim, welcome.
Thanks a lot, James.
For the subscribers in these areas, they don't have sort of like a North American or European standard of access to wireless internet. So how does this affect their life once they get onto this wireless platform?
Well, this is really monumental change for these people, because there's literally no coverage, no rural coverage in these areas. So there's no mobile phone usage in these areas. I mean, people may have a phone, but they're having to drive to the cities or whatever to use it. And if you think about what that means, and I think in one of our previous talks we heard from Orange, who was saying, you know, in these markets, the economies are very much based on agriculture and plantations and so on. So people are out in rural areas and have really no way at all, because there's no fixed line telephone either. They would have no way at all to communicate, to, you know, just day-to-day business, but also financial services and banking and those kinds of things. So this is transformational. And, you know, this has been talked about for years and years. I think the UN did some studies years ago and found that the correlation between communications infrastructure and economic growth and GDP per capita and so on, it's very directly correlated. So this has a huge impact on these areas.
You bet. So then people sort of say, well, Orange is a $37 billion Canadian company. Why would they partner with NuRAN to establish this connectivity in these countries rather than just do it themselves? What does NuRAN bring to the table that Orange finds preferable?
Well, NuRAN has its own technology, and very unique technology, very well suited to the rural areas. And this is technology that we've been developing in Canada for years. And it's I call it disruptive even, because on the one hand, it's lower cost to implement. So it costs about 1/5 of what a traditional mobile site would cost. And then it also has a much lower total cost of ownership or ongoing operating costs. And it's because we use very low power consumption and also very low cost to connect the tower to the main network, because we use satellite. And it's worth mentioning that, you know, we talk about solar. This is renewable energy. And so it's very environmentally sound, and it's very much on the development path of some funders and so on. But that's what makes it attractive to Orange. As well, what you're seeing with mobile operators worldwide is they're looking to others to own the infrastructure, and they'll focus on marketing, selling to customers, and providing the services over that network. And so in markets worldwide, they might be selling their tower infrastructure and leasing that back. In this case, what we're doing is building the towers plus the radio network that they use. We're making that investment up front, and they're just paying an ongoing operating cost rather than upfront capital cost. So they can use their capital for other uses and just pay us as they generate revenue, in effect.
Right. And how do you finance the construction of these sites?
The financing comes a combination. I mean, we bring our own equity, and last year we raised some equity, so we're using that. But also we're funding a lot of it with debt, and we're using both. We announced a little while back commercial bank finance that we're close to finalizing, and we've had approval for. But we're also talking to development banks, development finance institutions. This is very much in the sweet spot of those institutions whose mandate is to bring capital to these regions where economic development, raising the standard of living, all of those things are key. And so we're now working on a major financing with two of those institutions, actually. And they're very keen. There's been a lot of financings in the sector from these institutions, and that's what we're focusing on now, and we've got a lot of interest in it.
Sure. So I guess it's attractive to an institution because it falls squarely within the category on many levels of environmental and social good, or ESG investments, which is pretty much the most attractive new category of investment to come along in decades.
Well, that's right. Mobile's been around for years, and funding telephony and the economic benefits that I've talked about have been there for years. But now, with using solar, renewable energy, these things can be done economically and can be done to the advantage of both the mobile operator and companies like NuRAN.
Sure. So besides the DRC and Cameroon, where else does NuRAN envision taking this partnership with Orange?
Well, we've been talking to Orange about their African footprint for some time, since we've been talking about Cameroon and DRC. So we're looking at other countries of theirs in the sub-Saharan region. We're in RFPs in 3 different countries at the moment, which are live right now. And we're talking about others coming on stream soon. And the thing is, now that we've got a model that's tried and tested, we're using that in the other markets as well. So there's a big opportunity just in the sub-Saharan region with Orange. But we're also talking to other network operators as well.
Sure. And do you envision being able to access local debt capital from local banking institutions to fund these different countries as well?
Yes, exactly. Yeah. So the one commercial bank financing that we've announced has been passed preliminary approval, and we're just waiting on the final. That bank has a footprint across the sub-Saharan region and have already expressed their interest in funding us in other countries. Now that they've been through all the learning and understanding our business and the people and the technology, they're very interested in working in other countries with us as well.
Sure. Have the supply chain constraints globally had a negative impact on your ability to deploy?
They've slowed things down. Yes, definitely. I think we've been dealing with COVID for some time now. I made my first trip to see my colleagues in Canada a month ago, after about a year. So that's affecting all of us. We're not able to go to these markets as much as we'd like. And certainly we're feeling the supply chain pinch. It just means delays. It's not to the point where we can't get product or the prices are going exorbitant or anything like that. It's just really about delays. So that's been a bit frustrating for us, but that's the world we live in these days, I guess. And we keep an eye on the objective and it's all going well.
Of course. So then in terms of, you say there's RFPs out for other countries. Is there a healthy representation of competitors applying for the right to provide these services?
There's not many competitors in this space, I'll be honest. I mean, as far as the technology, there's really 2 or 3. Okay. And we're I would say this, but NuRAN's really the leading edge in terms of the technology it offers, certainly in the 2G space, 2.75G. So there's not a lot of competitors from a technology side or from a delivery side. I mean, there are other companies that will be bidding and trying to, buy someone else's equipment in and then build the networks and put the model together, but they don't own the technology and they don't have that lead that we do in knowing how the technology operates, knowing how to optimize it, and being able to suit our production to what the requirements of the country are. So there's really only a handful. And I think we've seen some very positive, the relationship with Orange is very positive. So we're really working with that and aligning. We've had enough time to work with them to align our strategy with theirs, so that when it comes to technology evolution and how we cover areas and so on, we're very much together with this, and that we think that gives us a big advantage on these proposals.
Right. And so finally, you consolidated the shares of the company last year, or rather earlier this year, and so that's created a much more compact capital structure for the company. Do you envision requiring to raise more capital, issue more equity to fund the full build-out of the current obligations in Cameroon and DRC?
The plan is not to raise a significant amount of equity. The plan is to do most of this with debt, most of the build to come with debt, probably to a ratio of 75% debt at least. We have, in our last fundraising, we issued some warrants, which we could trigger, and that would fund our equity requirements probably into next year. So we don't envisage issuing a lot more equity, and the focus is on the debt, the development banks at quite attractive rates, in fact. So we think it's a great proposition for shareholders, and the fact that we're funding infrastructure and hard assets and so on, again, is very attractive to banks. So that will be our focus.
Great. Jim, that's a great update. I appreciate your time today. We'll come back to you soon. Thanks for joining us.
Great. Thanks a lot, James.
You bet. Bye for now. As you can see, the stock performance of NuRAN relative to the corporate developments don't seem to match up. The stock is drifting lower despite a consolidated capitalization, market cap of $34 million.
34. And maybe this speaks to a larger problem, and the problem is, let's say the market has peaked. Let's say rates are going higher. Let's say all these things. China's got problems. Maybe there's bigger issues out there, and now maybe the worms turn for a while. It's going to get tougher. Maybe the valuations are all screwed up. I don't know.
Well, that's what I'm saying. I mean, again, as a conflicted participant in the shares, this low price, I mean, I hate to sound like a promoter, but it could be an excellent entry point.
Absolutely, sure, especially if the fundamentals prove out.
Well, that's just it. So this is the thing, is I would point out that NuRAN, since starting to roll out these towers in partnership with Orange, one of the biggest cellular providers in the world, they're now a operating company as opposed to a development stage. So they're going to start trading on the strength of their financial performance and less so on their speculative future potential value. So until the financials come out, the stock could be expected to drift lower, especially if the general trend in markets is lower. And that may represent a good entry point for this stock for risk-tolerant investors, because this is a CSE stock. So that's all we have to say about that. We'll keep our eye on it. Speaking of growth, our next guest is a Chief Growth Officer, get it? Growth Officer of Columbia Care Inc., one of the larger cannabis companies on the planet that is ramping up revenue in a big way, but I'm going to let him tell you that story. My next guest is Jesse Channon. He's the Chief Growth Officer of Columbia Care Inc., trades on the CSE under the symbol CCHW, and in the United States under the symbol CCHWF. Jesse, welcome.
Thanks so much for having me, James.
Hey, Jesse, your company's sort of like one of the most dynamic ones in the entire cannabis space. I was pleasantly surprised to see that your revenues have really taken off. Your last third quarter revenue, $132.3 million, increase of 144% year on year. What is happening? What is driving all this growth?
Man, I mean, great question for the Chief Growth Officer. I should probably have a pretty good answer here. Look, I think it's a number of things, right? We're coming off an incredibly interesting last 12 months, right? Obviously with the COVID and the pandemic, buying patterns, everything that we saw. But I think the one thing that Columbia Care has that is, a bit unique is the footprint, right? And as we continue to sort of go deeper operationally in the markets where we have that presence as we roll over into the new retail experience cannabis across the country, launching these brands that have just been incredibly well adopted and sort of welcomed by our communities. I think we just continue to see that lift. So the growth is incredibly exciting. I think a lot of it has to do, again, with sort of sweating the assets and continuing to expand in the markets that we have that footprint. But I'd be lying if I said that the brand launches and the retail changes hasn't had a pretty significant impact on it as well.
Sure, you bet. Okay, well, so tell me about this relationship with Mike Tyson. We had Mike Tyson's 2.0 CEO on the show last week. Yeah, and so it was really intriguing to me that Mike had this Tyson Ranch brand previously that was aligned with some other of our companies that we follow, Planet 13, and now he's over with you guys. So that's a completely new thing.
Yeah. So, it was a really interesting opportunity, right? Chad Bronstein, who's the CEO and co-founder over at Philo, is a friend and someone who we work with incredibly strategically at Columbia Care from a Philo point of view. And he had gotten involved in helping to sort of orchestrate that relaunch for Tyson. And, we were talking one day and, just sort of catching up on the industry at large. And we were talking a bit about Tyson. And, we threw it out there and said, hey, would there be any interest in national cultivation and manufacturing sort of level partnership? And there was obviously a lot of diligence and a lot of research that we needed to do on our side in order to feel comfortable, right, with that alignment and with that brand. And I had the opportunity to speak multiple times in person and one-on-one with Mike and with Adam, the CEO who you had on the show, and others. And we just felt like there was an incredibly authentic conversation that was being started around a lot of the things that Mike is very passionate about and sort of plant-based medicine and how he attributes that to many of the changes that he's made in his life. And our mission at Columbia Care, historically we've been sort of known as the medical team, right? But our mission has always been very much to improve patients and customers' lives, right? So we put plants in the ground, and our job is to get them into the people's hands that need them. And we felt like there were a lot of conversations that Mike was able to start and a lot of people that he was able to reach that historically have been a difficult segment to impact in our space. And so we were really keen to align with that team on national cultivation manufacturing. So that's where we're at, and we're launching products in a number of states. I mean, Colorado's coming online end of this week. We've got a handful of states and markets that'll follow it almost immediately between now and call it end of the year. And it's something that there's a ton of internal excitement around. So it was just very lucky sort of coincidence of the way it was being launched.
Sure. So then your strategy is based in large part on acquisition and some organic growth as well. So is the Tyson brand going to be sort of internal to Columbia Care, or is it sort of a licensing agreement?
No, yeah, it's its own brand, right?
Okay.
So, we've been very fortunate. Organic growth at Columbia Care, we were in a position where we won an enormous amount of licenses as far as those vertically integrated markets organically. And then we had the sort of luxury of acquiring in some great operators and brands into the portfolio over the last year and a half or so. But with the Tyson sort of alignment, that's very much, its own brand, its own company, its own entity. And we're just going to help to power it, right? We're going to help to ultimately give it the scale that it needs to get across as many markets as quickly as possible.
Fantastic. All right. So then some of your other developments here that are really interesting. You're the first U.S.-based company to win Platinum Marcom Award. What is that all about?
Yeah, I mean, it's humbling, right? Because I think any of these awards where you have sort of a jury of your peers or people, colleagues that are ultimately weighing in and helping to sort of determine that those to me are the most important, right? And the most impactful. And I think with Marcom, what we saw with Marcom, the Platinum Award that you're referencing was for the cannabis. So the new retail experience that we launched, it's in, a handful of states and markets right now. Will be, I think, around 80 locations that'll be flipped over the next 12 months or so. We'll exit this year with about 25 or so cannabis locations across the country. it's just a great new aesthetic. It's a great new experience. It's very technology driven, like the thing that you see behind me here, these light boxes. Forage as a proprietary system. Actually, Forage won a gold Marcom for mobile buying experience, right? And we're the only US-based cannabis operator to win in both of those categories. And we're not by nature, right? We're not a technology company or a mobile buying company, right? We're a cannabis operator, a vertically integrated operator. But we saw some opportunities to really invest and lean in experience. And so what you see with cannabis, what you see with Forage as an ability to sort of search and find the best products that are a fit for your life, those are just gaps where we saw the ability to say, okay, we sort of have a responsibility to lean in and try to innovate here and create something better. And it's like I said, it's incredibly humbling to have, third parties recognize that work for the team.
Right. Okay. Switching gears a bit now to your financial performance. The holy grail of the cannabis industry and one of the toughest aspects, the toughest bars, has been profitability, just plain old profitability. Now, your financial metrics as reported are, eye-popping. They look fantastic, yet much like all of the companies who are reporting some form of profitability, the word adjusted EBITDA, adjusted gross profit, is sort of persistent. So I'm always trying to understand, when does just plain profitability enter the picture, where it's just good old-fashioned GAAP profitability with no adjusted bits?
Yeah, look, I'm going to be honest with you. I am probably not the expert for your show to weigh in on financial, right? They keep me arm's distance from it, I'm sure, as it is anyway. But I mean, the reality is, fair question. I think that we struggle with a couple of things in our industry. I think that consistency and normalization to be able to sort of compare things apples to apples is a big one. So a lot of what we do from a reporting point of view, I think, tries to provide a level of consistency with the way that other operators speak to and report to their financials and sort of the norms that have been set in the industry, so that investors and partners can look at that from the outside and say, okay, I feel good about, where this is trending based on the way that others are reporting. We're moving to ultimately U.S. filer status, at some point, I believe in next year is what we've said publicly. And so I think that'll help to normalize even further, right? As you talk about GAAP versus, IFRS and all of the other sort of mechanics that exist there. So, it's a long-winded way of saying we're just trying to be consistent with what we think the sort of market accepted norms are right now with that concept of adjusted EBITDA. And I think you'll see more and more normalization to those things as we move to GAAP.
Sure. There's been increasing sort of buzz and rumor about federal deprohibition of cannabis. Is that one of the key factors that will make the difference between, extreme profitability and marginal profitability?
Yeah, I mean, I think that there's a number of things that can change over the coming years, that it's pretty much all upside for the most part, right? For us as an industry, it allows us to serve more people, more customers and patients. It probably takes a bit of the strain off of some of the financial things that we see today with regards to taxes and other aspects of that. It allows us, with safe banking and other provisions, to be listed in domestic exchanges like, New York Stock Exchange or NASDAQ. All of those things, I think, ultimately impact some level of the sort of financial health of organizations in our industry. I think that what you're seeing is that there's not a whole lot that people agree upon at 70% plus in this country, right? And definitely not at 90.
Right.
Cannabis reform is one of them, right? Like, I mean, we have a hard time, agreeing on just about anything at this point right now. But cannabis reform is one of them. It's got overwhelming support on, a wide sort of spectrum of individuals across states. We see the Republicans now getting incredibly involved with, what Representative Mace has presented, Congresswoman Mace, and the language in that being, more on the state side versus some of the other larger things that we see with Schumer, Booker, Wyden in that bill. But at the end of the day, it all comes down to the fact that normalization is coming, right? I mean, cannabis acceptance and reform is coming. And so I think it's a matter of timing and in what we see as far as phasing or if it's all at one time. But there's no question that those larger sort of macro regulatory changes will have significant impacts on our industry and our company.
Sure. To some extent, from an external perspective, it looks like it's a war of attrition in the industry. In most markets, it seems like there's just too many players and there's too much cannabis, and especially there's still a pretty significant representative contingent coming out of the black market. So it looks like the companies that are still going to be there by the time this full regularization and legislation comes through are going to be the real beneficiaries, and then that's when the profit margins are going to start to rise. But when do you think that's going to happen?
Oh man, so before I get to any sort of crystal ball and get myself in all sorts of trouble with the team internally, the only thing that I would say to that is, look, I mean, depending on what metrics you look at or what reports you buy into, the one thing that we know is that this market is going to be exponentially larger in 5 years than it is today, right? So if we're a $20 billion industry today, as far as, legal regulated cannabis, and that's moving to 60, 80, 100, I mean, take your pick, right? It's a multiplier no matter what. It's not an incremental. And that doesn't mean that our current customer set is going to consume 3, 4, 5 times as much cannabis a year, right? It means we don't know 40, 50, 60, 80% of our customer base yet. And so I think that when you look at some of these markets where you do have, a sort of bumper crop situation where you've got a lot of product right now, or you've got a highly fragmented supply chain with a lot of retailers or a lot of producers, we still have a lot of growing to do as an addressable market and as a demand. So I think that there's still plenty of wins for everyone, right? Not just the large companies that will ultimately sort of, make it through, to your point, some of the volatility and consolidation, all of these things that typically happen in these markets. But there's great brands out there. There's great operators out there at a single state level that I also think are going to have a lot of success in their future. As far as the crystal ball, when does this all change? No chance I'm weighing in on that. I would say, it's sooner than later, right? Like at some point, there's got to be some incremental steps that are taken to where we see sort of advancement, whether it's with safe banking, which is pretty universally sort of accepted on both sides of the aisle. Obviously there's a lot of work that needs to be done with regards to social equity provisions and making sure that there's an opportunity for success in such an incredible growing industry for a number of individuals and operators and people starting, startups and delivery and technology and all of these things. So, it's not going to be months, right? I think it's going to be years, if I'm being honest. But I don't think it's way out in the future. I think it's sooner than later.
All right. Well, so you have the Yogi Berra school of thought that says it's okay to make predictions, just don't say when.
That's listen. There's a reason he was so universally revered, right?
Exactly. Exactly. All right, Jesse. Well, it's great to talk to you, and I really look forward to having more of these conversations in the future. Thanks for your time today.
Thanks so much for having me, James.
You bet. Bye for now. Yeah, so Columbia Care, obviously having sold off since this high back in February, which all cannabis companies do. Yeah. And looking like it's consolidating down here on bigger volume. Yeah. Could be a reversal in the cards here.
Yeah. Only time will tell.
Well, this is the thing. Only time will tell. Yeah. Certainly, as Jesse pointed out, if the decriminalization federally occurs
in the U.S.,
that's going to have an uplifting effect on all U.S. exposed companies. So we'll wait and see what happens there.
Bitcoin's backing off, 56 and change. Huh.
Well, the one thing that anybody who's a participant in the crypto sector has to be aware of is the number of new projects, as they call a crypto iteration, coming on stream. They are legion in the volume of new ones. And every single one of these guys calls the other new ones shit coins because That's just how it works. It would be like, yeah, it would be like, I'm the CEO of a public company, you're the CEO of a public company. You're a pump and dump as far as I'm concerned. Only my company's got the goods. And that's exactly what's happening in the crypto sector right now. And it's just so...
There's no easy way, is there?
Well,
it's easy for a while.
It's so funny to see history repeating itself in the crypto sector.
Again. History repeating itself over and over.
No kidding. Not again. But yeah, so let's take a look at the price of gold right now, because after, building some momentum into the increasing indicators of inflation, it blew out. It blew out hard.
Yeah.
And so
the
what?
Specter of higher rates.
But higher rates are good for gold.
Well, initially, they're bad. Right, because you put money in, you get the higher yield. But, if there's a real fear of inflation, that's when gold will. Yeah. So right now, maybe they've quelled things.
Backed off.
Quelled?
Quashed. Okay, so let's take a look at interest rates.
Look at oil. Oil dropped $10 just like that.
Yeah, okay, but here's the interesting thing is the 10-year rate is at 1.64 today.
Yeah.
So higher rates seem to be in the offing. Higher rates indicating higher mortgage costs, indicating...
less money for everything else.
Well, and with the moratorium that still dominates across the housing sector and mortgages in the U.S., that is holding back a floodgate of foreclosures, which is a floodgate of inventory, which is going to have an absolute huge impact on the prices of residential real estate in the U.S. once that moratorium comes off. Don't you think?
It looks ugly out there.
It's freaking ugly. Other news this week, I want to mention quickly that our show sponsor, Voxtur Analytics, VXTR on the TSX Venture, VXTRF in the United States, finalized and completed their acquisition of Benutech. Now, while that may not indicate anything immediately material to the balance sheet of the company or the revenue prospect, what that does do is deepen the technological offering of the company across all of its title sector. So this is only going to make Voxtur more attractive as a solution to participants in the real estate sector who are looking for a digitized real estate universe. Again, Voxtur Analytics is our client. We have a call on 1 million shares an option on 1 million shares at $1.15, so we're not in the money there. I have still 50,000 shares or so of Voxtur stock. I buy it and I sell it. For example, their financials are coming out on November 29th.
Next week.
I'm on the bid at 79 cents because I will fill my boots with everything I can get at 79, 80, 81.
Okay.
Because next Monday, the financials are going to come out.
If you're bidding 79, you're going to get it at 81. Just saying. A little levity there.
Well, that's hilarious, Ed. You never know. Who's going to come down the food chain and fill your boots? You just don't know. So let's take a look at Voxtur.
Got to start somewhere.
Yeah, exactly. So the bottom line is I'm conflicted as all hell, but I have reason to believe that the quarter is going to outperform expectations, and this is why I think it will have a really serious uplifting effect on the stock. As we've seen a couple of these runs in here. Well, this was the last time they put out financials. And so...
Wow. Maybe. Well, it looks like a little double bottom there, like just there and then, right there.
Here.
Yeah. Like if we need to see it.
Yeah.
Those blue lines are definitely flattening out.
You bet.
Hey?
Our next guest is Anthony Tennyson. He is the CEO of Awakn, AWKN, and they are in the psychedelic space in a big way. My next guest is Anthony Tennyson, CEO of Awakn Life Sciences, trading on NEO under the symbol AWKN, and in the United States under the symbol AWKNF. Anthony, welcome back.
Thanks. Good to be on. Good to speak to you and your audience.
Thank you. It's great to see you again. Anthony, the last time we spoke was back in June, and since then you've had a number of really great developments. Why don't you give us an update on what's going on with Awakn?
We're a biotechnology company. We're focused on developing and delivering next-generation psychedelic therapeutics to better treat addiction. And the addictions we're focused on substance addictions like alcohol and behavioral addictions like gambling. And so since June, we've been working hard to execute on both the development side of the business, which is the biotech side, but also the delivery side, where we deliver those therapeutics. So on the development side, we're working with ketamine, MDMA to develop the therapies of that therapeutics package, but we're also developing our own drugs. So with ketamine, we've initiated the world's first study for a psychedelics treatment for a behavioral addiction. We've initiated a study for ketamine as a treatment for gambling disorder. And gambling disorder, it affects 400 million people across the planet, and it's currently very, very poorly treated. Also for ketamine, we've been really lucky. We've secured a publication date or confirmation of publication of the results of a phase 2B ketamine-assisted therapy trial for alcohol use disorder. That's going to be published in December in the American Journal of Psychiatry, which is one of the highest impact journals in the world. We've also then for MDMA, we've submitted our clinical trial protocol to the MHRA, which is the competent authority in the UK. We've submitted that, we've received feedback from them, and we should be submitting a clinical trial application for a phase 2B MDMA trial for alcohol use disorder, building on the phase 2A study that our team ran before they joined us. And we'll be submitting that this calendar year. And that the importance of that is really not to be understated. You typically have a 75% relapse rate with the best treatments available for alcohol use disorder. The team discovered when they ran that phase 2A study that people who went through MDMA-assisted psychotherapy, there was only a 20% relapse rate after 9 months. It's groundbreaking. And not only that, though, we've also run the first part of our drug discovery program. We've partnered with Evotech, the world's largest drug discovery company, and we've gone through artificial intelligence, medicinal chemistry, human and rat assay screening, and we've identified 4 compounds that are entactogen-like. So they've got drug-like properties and they have the potential to be entactogens. So MDMA is an entactogen, but we're actually looking to develop an entactogen that will work in 2 hours with a 2-hour recovery window. So all of that activity, that's just what we're doing on the biotech side of the business. In addition to that, we're also delivering treatments as well. We've acquired a clinic operation in the Nordics in Norway, and we've also opened the first clinic of its kind in the UK in Bristol. And in the next couple of weeks, we'll be opening a clinic in London. So we're a biotech company with massive potential, but we also have 3 clinics open and operational.
Huh. Wow, that's quite a bit of accomplishment for just six short months. So how do you acquire patients in your clinics? Do they find you online? Do they come from referrals from psychologists, psychiatrists?
That's a really good question. So we've been very lucky. We've got an incredibly strong team. You know, our team is led by Professor David Nutt, Dr. Ben Sessa, Professor Celia Morgan, and Dr. Laurie Higbett on the research and the clinic side. These are globally renowned people, particularly Celia, Ben, and David. So we've been very lucky. We've actually had people actively reach out to us. So we've got an extensive waiting list for our clinic in Bristol. Other than that, though, the typical outreach program that we have in order to make sure people are aware of our services is a national media campaign, again, enabled by people like David and Ben and Laurie and Celia, a local media campaign to ensure that people are aware of our services. But really critically, it's about ensuring that doctors, psychologists and psychiatrists are aware, GPs, psychologists and psychiatrists are aware of us, and that they refer their patients to us. So, you know, we were really lucky. We had a lunch and learn is probably the best way to describe it for 120 private GPs coming out of Kensington and Knightsbridge. So it's kind of the Harley Street district in London, which is one of the leading areas in the world for private medical care. And we had David Nutt giving a 90-minute speech on the future, or talk, I should say, on the future of addiction and mental health treatment in the UK. And the last question of the day was from a learned person in the audience who said, "Hey, David, what's the future of addiction and mental health treatment look like in the UK?" And before David could answer, the most senior doctor in the audience said, I think it's probably us working for David. So, so we're active across sort of national media, local media, and then referral pathway outreach, and that's how we get people to come into our clinics.
Wow. Okay, so it sounds like you've got quite the closed ecosystem there. Clinics to, sort of trial some of your drugs that you're in drug discovery mode on. So which is the more sort of revenue robust pathway for you guys? Is it the clinics and the treatment in person, or is it the drug discovery route?
Well, we are a biotechnology company. So absolutely the future, the value of the company is in the biotech side. So it's around the development of those therapeutics packages. So therapies and drugs to be used in combination. However, the psychedelics industry is different than any model that has gone before in healthcare or addiction. And 4 things need to be delivered together for psychedelics to be as effective as they possibly can be. And that is the compound, the therapy, the therapist, and the clinical environment. And so that is why we are a biotech company, but we will have a limited number of clinics. And those clinics are there to enable us to test and validate in the real world the therapies that we have developed in our clinical research. It also gives us access to data, because data is the fuel for the 4th industrial revolution. And having access to the clinics, we can, in addition to testing and validating the therapies, we can also capture a significant amount of data that enables us again to test and validate how modifications to the treatment programs deliver results, which comes back into the research business and again ensures that we are very relevant in what we do and that we are as completely effective as we should hope to be. So we're a biotech company. Value in the company is in the biotech side of the therapeutics development business, but we have got a clinics business to test, to validate, to refine. Also, it's very handy. It gives us access to free cash flow because each clinic, we'll have 20 clinics. We believe each clinic will generate 4 million sterling top line. That means going into, by the end of 2024, we hope to have 20 clinics. So that actually means as we go into 25, we should have 80 million sterling revenue run rate. And that gives us the ability to reinvest that free cash flow back into the biotech side of the business, which is the real engine of the business. Gives us the ability to reinvest in a non-dilutive manner.
Huh. Wow. Boy, I feel like I've been standing still for the last 6 months. It sounds like all of the regulatory barriers to this kind of research and the progress towards this is a mainstream option for mental illness and for psychological disorders. Have they completely evaporated throughout the UK as they have in North America?
I wouldn't say they've completely evaporated. I think they are beginning to break down. So for our clinic in Bristol, we have secured approval from the UK regulator to deliver psychedelic ketamine-assisted therapy for addiction, anxiety, depression, PTSD, and eating disorders. So that's a really, really big step. We've got that absolutely clear approval from the UK state to do that. However, it's in an off-label fashion. So people have to pay for it out of their own disposable income. So it's not available, it's not reimbursed.
Right.
It's not available through the public healthcare system. So our core purpose as a company is to democratize psychedelics. And democratization of psychedelics means securing marketing authorization to enable on-label use and reimbursement and availability through the public healthcare system. So we're beginning, but we're not there fully on our journey as of yet.
And what does that timeline look like to you in a best case scenario?
Well, so what we just announced yesterday is we've signed a memorandum of understanding with the National Healthcare Service in the UK. That is the overarching healthcare delivery system for the UK. It's the second largest healthcare system in the world with an annual budget of $200 billion. So we've signed a memorandum of understanding with them, and there's 2 core areas for that. It's to assess how operationally ready the NHS is to deliver ketamine-assisted therapies for addiction and treatment-resistant depression. And the second core area for that is to bring, do you remember I said we've got a phase 2B trial about to be published in the American Journal of Psychiatry?
Yep.
We're actually working now with the UK state to see how best we can bring that research forward into a phase 3 pivotal trial as part of a program to secure on-label use for ketamine to treat alcohol use disorder in the UK. So the length of how long is it going to take to get on-label use for psychedelics in the UK? For us, we're hoping 3 to 4 years if we can execute that program properly. And then you've also got others like MAPS, who are, maybe 3 to 4 to 5 years away from securing on-label use for MDMA to treat PTSD in the UK and also the EU. So we're probably looking in about 5 years' time to hopefully have on-label use for a select number of psychedelics to treat a limited number of conditions in an on-label fashion in the UK. And ideally, really what good looks like here is if people are able, the NHS are able to refer their patients to companies like us, or their clients to pay companies like us, so that this can be democratized and can be available and people don't have to pay for it out of their own pocket, that it's paid for by the public healthcare system.
Yeah, fantastic. We're going to leave it there for now, Anthony. I really appreciate your time today. I hope you have a fantastic day swimming in the Irish Sea, and I look forward to talking to you again soon in the future. Thank you again.
You're more than welcome. I'm not quite sure why I agreed to go swimming today, but there we go.
Well, you're a better man than I. Thanks.
Thanks.
Bye-bye.
Good to see you again. Take care.
All right, so maybe that's why Awakn stock seems to be gathering steam here at the $3 range.
The stock seems to be awakened.
Well, there you go. And yeah, so Anthony speaks so well and seems like he's got the whole story so organized in his head. And it's just like everything he's said from our last interview back in June seems to come to pass. So this is one of those stories where I think, despite the fact that the stock is expensive compared to way back here, it still could have a lot of room.
So what's the range there? What's the range there?
$3 down to here where we started covering it was $2. So it's basically up 50%.
Yeah. And approximately how many shares are outstanding?
Shares issued 24.8 million.
Nice tight float.
Very tight. Well, that's why it has that kind of torque in the stock. Torquey. A little torquey.
Little pulley go gorky.
Yeah, and it's Thanksgiving.
It didn't gorky.
That's turkey, not torquey, not turkey.
You're talking torquey.
Don't talk about the turkey.
Don't
when
be
it's the
talking
torquey.
torquey.
Torquey stock. That's what we like to see, is a torquey stock. So have you ever tried ketamine, Ed?
Is that the stuff that makes you numb?
Puts you in a bit of a K-hole.
K. Yeah, I think I did. Yeah, years ago.
Yeah. And did you ever come down?
Oh, yeah. I remember it hits you so fast from the time you do it to the time you walk back to your chair. You almost can't make it.
Yeah. No, it's a serious.
Anyway,
I'm.
Don't judge me, people. I'm just this other stupid human being.
You're just the messenger. Yeah, there you have it. Now, is there anything else that we should be talking about? That's our show for the week. Otherwise,
well, they released the Petroleum. I thought that was interesting.
Petroleum. The release from the Petroleum, the National Petroleum Reserve.
You know, like that. This is their.
Yeah.
Let's not touch it unless we really need it.
This is interesting. So there was no discussion of releasing any petroleum from the National Reserve back when petroleum was $140 in 2009. So why is it suddenly that we're panicking in 2021?
Yeah.
Just because oil's at $79 a barrel.
Yeah, there's some people are worried. There's some people are nervous about something. There's something going on.
I think somebody's playing into somebody else's short position or long position here, and that's all it is. But whatever. We don't know anything. We are merely peons here in the center of the economic universe in Dunnville, Ontario.
Yeah.
Egg capital of the world. And that's our story. We're sticking to it.
Egg capital of the world.
Yeah, I say so.
Okay.
Green eggs.
Okay.
Have you ever had green eggs in ham?
Dr. Zeus?
Yeah.
Okay.
I do not like them, Sam I am.
Sam I am. Okay.
All right. Off to New York.
Uh,
That's our show.
okay.
Goodbye.
Bye-bye.